Time for the market report. Things keep getting more and more interesting as we move forward.
That's right, Mike. You know, the crop prices keep seesawing back and forth. It really makes you long for those days of 1 to 2 cent price changes.
Absolutely.
We'll be talking about that and more. But first, the numbers still moving in dramatic directions. Then our row report speculating on wheat prices. And finally, the ever-present inflation story. Is it here to stay? We'll talk about it. Market split again last week. Row crops mostly down, while livestock slightly up. Let's take a look. Last week's biggest loss, soybeans down 43.5 cents, followed by wheat at 36.5. We'll get into why in just a bit. Last week's biggest gain, lumber, back up nearly 30 bucks, and corn up 11.25 cents. Much of that having to do with price correction based on weather and supply. So this week in our row report, we're focusing on wheat. You know, it's one of the biggest stories since the start of the Ukraine war. But wait just a minute. Market analyst Ted Seifried says the price is justified but inflated due to the war.
We were quite heavy on Friday, so the question is, you know, harvest pressure, when are we going to be done with that? I would think that in a year like this where this crop's a lot smaller than what we were thinking, what we were intending to have, right? So when that happens, you've got a fair amount of wheat that's already been sold, so it doesn't have to go, when it comes to town, the cash doesn't have to go to market. And whatever you are doing, whatever is getting sold, it's probably going to dry up sooner than it usually does. So I'm thinking by the time we're 40 to 50, maybe 45% harvested, that harvest pressure should probably be done. In a normal year, you say 60 to 70% harvested. That's when the harvest pressure lifts and we start to get that post-harvest rally. This year, I think that happens earlier, so it might be within the next week or so. But again, that kind of depends on what's going on with the row crops, I think, and it also kind of depends on what's going on with the whole macroeconomic climate that we have as well. You know, we found a level that really, I think we're sort of value priced in wheat, and without seeing a huge increase in exports, it's tough to say that, you know, the initial spike that we got from the Ukraine or the Russian invasion of Ukraine, it's hard to say that was really justified. In fact, at the time, it was a short squeeze. It wasn't really fundamentally justified, in my opinion. Now, since then, we've had some bullish things happen for the wheat. Obviously, drought, obviously low yields, you know, production issues, not only here, but in other places as well, that have kind of come in to justify some of these higher prices. But whether we go higher or not, I think really hinges on, hey, are we going to see this influx of business coming in for our wheat export program? And we haven't seen that so far. I think you have to have really big doubts about that. So, yeah, again, I think wheat can recover after we get past the harvest pressure. I think there can be some more upside, but it has to come from strength in the row crops. I think at this point, wheat would be the follower.
Inflation, that's the big economic news we're all talking about. But is it here to stay? Once again, Ted Seifried says we are in an inflationary bubble, and it could burst sooner rather than later.
Input costs are starting to come down, as sort of predicted. And, you know, if you're a believer that we're going to see an inflationary bubble burst happen between now and next growing season, that would suggest that we're going to be paying quite a bit lower for input costs. It would also suggest that corn prices could be quite a bit lower by that time, too. I want to be careful because I do realize that there is fairly significant upside potential in the short term based on weather forecasts, based on a blow-off top in the inflationary climate of the market. But I really worry about where we're going to be, even going into this harvest, and then for the next following couple of years. I really thought this was going to stick around for quite a while, and it has. But now you see the cracks coming in the foundation in the form of what's happening with the stock market, what's happening with cryptocurrency. A lot of the wealth and money flow in the economy that's created this inflation has kind of disappeared, gone away because of the wealth destruction that's happened in other markets. And we have to take notice of that. We have to realize that over time, that, along with higher interest rates, will really go a very long way to not only busting this inflationary bubble, but really taking us to a period of deflation, possibly. You know, commodities are directly impacted by inflation because that's the thing. You know, when there's more money in the money supply, then the money is worth less and commodities have to be worth more. That's really the definition of inflation. But the thing is, when you're taking money out of that money supply, that leaves that inflationary bubble at risk for bursting. When it does, what happens is the products that you use these commodities to make, i.e. beef, i.e. ethanol, you know, things like that, In an inflationary climate, it's okay to have high-priced inputs because the products are high-priced and people are willing to absorb that. But when you have that inflationary bubble burst and people are not willing to absorb those higher prices and pay those higher prices for the products, that demand starts to, that's what we call demand destruction. Demand starts to go away. Then the inputs have a problem because they can't be high priced if the products that they're making, if that demand's going away. So the demand for the inputs goes away, i.e. corn, right? So, yeah, inflation goes away. That's a big problem for grains. I'm going to argue there's probably about $1 to $2 of value in corn, of the price in corn, that is 100% tied into inflation. And if you take the inflation away, and you're still, even if you're still looking at the same balance sheet or possibly even slightly more bullish, I still think there's a very sizable downdraft that can happen in corn prices just because of inflation. Go back to 2007, 8, and 9, and you'll see what I'm talking about.
And that's it for a deeper look into the markets.